Rocky, I don't think you can do that. I'm pretty sure you can't do that, Rocky.
Ten seconds. 5, 4, 3, 2, 1.
And you're live.
Boom. Well, trust everybody's well. Had a good weekend. We go jump right off in the middle of this thing, man. So we'll go over the idea of the strategy. The idea of the strategy. Well, first and foremost, this strategy will be called kind of the combine killer. I know a lot of people are struggling with that, and it uses some pretty strict risk parameters that you've got to stick to. And it's tough to get, and they limit your contracts and this, that, and the other. And so,
Webex Assistant is enabled to save audio highlights.
taking a little bit here, a little bit there. It's tough to sit in these trades when they give you a small amount of contracts and really try to make the most of just a few little contracts, but yet you're trying to conserve profit, or conserve your ability to keep trading throughout the day by taking these small little profits, here and there, where you can't just really get into a trade and just sit in it. And that's the idea here, is to put minimum amount of risk on the table and let a trade work, as long as the trade will work. Sometimes these things will go way further than we ever expect them to, and you can take advantage of all that with this deal here. And really, it just kind of capitalizes on the idea of where your average everyday, run of the mill guy gets in a bad spot, and it really kind of, you're playing the market against itself in a way, where most people are losing money, or jumping in at a late spot. You're basically trying to take advantage of that and run it the other way and squeeze them, in either direction actually. But and then you anticipate them to start the revenge trade thereafter, which really kind of just boosts your trade even more. And that kind of dials back into the point of these things go further than you expect, because most people will revenge trade that thing till they blow up, and that's the idea, right? You capitalize on that, and it happens, and we have to be honest with ourselves and say that we all been there. You know what I mean? If we've done this long enough, we've all been there and we've all done it. And the best thing that we can do is just try to figure out how to learn from that kind of stuff. And so that's the idea. So we'll get this thing started. Now that we know kind of the idea of the strategy and what it takes place of. So we'll start Friday on the NQ. I like to do everything on the 1 minute, with this particular strategy, because it gives me a cleaner picture. And so that's what we'll go through, and we'll just mark this thing up kind of. So I have a volume indicator down here at the bottom. And it's nothing special. It looks like it is, but it ain't. Um, Basically what this red line is, it just shows you the amount of buyers. It kind of gives you an average of the amount of sellers versus the average amount of buyers, and that gap in between, and kind of where buyers step in, and sellers maybe not so much. The only thing I use this for, this red and green line, is just where does this volume poke out of it at? Give me an idea of where, where is an abnormal amount of volume being put in relative terms to what's going on to the left. You know what I mean? That type of stuff. Like this volume bar here. Yeah, it made a lot of sense to pay attention to this one, because, in relative terms to the left, it was a lot bigger. So that's really what them two lines are for. And outside of that, it's just regular volume is all it is. But we'll dial this thing way back here. I've got an idea in my mind of this. If you follow some other work, or paid attention to some of this stuff, I've got a real good spot in my heart for the hours of 3 a.m. Eastern time, 6 a.m. Eastern time, and 9 a.m. Eastern time. The market likes to rotate around them, whether it be up, whether it be down, somewhere, something, maybe give it 15, 20 minutes in front or 15, 20 minutes in behind that 3 o'clock hour. But somewhere in that spot, the market likes to rotate around them numbers, them time slots, just due to other markets opening. You know what I mean? But I pay attention to them, and as you see, volume will kind of roll in about them times, and it'll give you an opportunity. You know what I'm saying? If you can get yourself up and get at it that early in the morning, you'll get you an opportunity typically. This is hard to get up for me for, but I do try my best. I don't always get up for it, but I do try my best. And in the 6 o'clock hour as well, or excuse me, 6 o'clock hour Eastern time, it also will offer you some opportunities. If not, it will be the setup of an opportunity later on in the morning, But we'll mark this thing up. I'll show you kind of what I'm talking about here. As you can see, excuse me, if you can see, price kind of rose up. I mean, we were in an uptrend, right, for days. So we know the upside is the best direction to be trading. We do know this already. You obviously want to trade in the direction of trend, but everybody thinks they're smarter than that. You know what I mean? And they always try to fade it. Well, there's a right time and a wrong time to do all that stuff. Well, most of the time people will look for opportunities to try to fade this thing, and very few is going to fade it up here. You know what I mean? Most of them are going to fade it when it's already like super obvious. And that's what we're taking advantage of, is the folks that are late selling, that pile in a little too late. Well, we see volume run up, okay? So I'm paying attention down here to where volume spikes come up, okay? Well, this volume spike did not exceed this. We're looking for sellers, late sellers, right? And the idea, let me go ahead. Yeah. So let me go ahead and show you that. So the idea is you're paying attention to these ones that exceed the ones to the left, right? So we're going to pay attention to this volume or this bar. All right. Well, price just made a lower low, never actually kind of come up above it. So it just kept dying off. So what we're going to do is we're just going to pay attention to the biggest volume bar at the bottom, right? Well, we didn't know this was the bottom, obviously. You know what I mean? If we pull it all the way over here to the left, we didn't know, or all the way to the right, we didn't know that was the bottom. You know what I'm saying? But we're paying attention to each one of these volume bars. All right. So now we've got volume that has died off. So what we'll do is we'll take this volume bar. I mean, this candlestick, excuse me, in relation to this volume bar. What we're going to do is we'll draw a box on the body of that candle. Give me a rectangle. So we'll stick a box here from the top to the bottom of the candle. Okay? That is our zone. That's where we're going to play ball. So what we want to see is, let me lock this thing down here for you. Okay. So we're looking for a move to the upside because we know that the direction of the market is up at this point. We already know that. We've established that. So we're looking for what I would assume would be trapped sellers that have sold down here at the bottom a little too late in the move, and then, for the market to run a date against them is what we're looking for. And so the idea is you want to see price get down here and then come back up above this candle and then come back into this box and reject off of it, right? And when you see this rejection candle, right, normally what you'll see is an indecision candle and then maybe like a full body candle. You know what I mean? Like a doji or some sort. Like you could consider that maybe a doji, or yeah, and then you got a full body candle beside it or something. But anyhow, it's a rejection candle nonetheless, off the box. And you would take a long off the rejection candle, right? The next candle would be your entry. Okay, so you took a long right here. Okay, and then you would just stay in this long, right? You just stay in it. No need to get out of it. Well, you do need to be mindful of what's going on, where you are in these time frames. Remember me saying the 3, 6, and 9. Well, rotations happen around 3 and 6 and 9. Well, you could feel confident getting along with this thing at 3:16 in the morning, 3:19, whatever it was. No, excuse me, 3:19, and just staying long in this thing, somewhere up to 6 o'clock. And there you go. 6, whatever it was. I mean, you wouldn't have probably got out right there, but I mean, you certainly, I'm going to go into detail of how you could get out a little bit sooner, but you really need to be paying attention to some of these candles that have volume at the top. Like this right here, that's an actual profit taking bar. You know what I mean?
Sorry, guys.
So that's kind of the way that, hey, can we do a mic check, please, on everybody? But yeah, so you could have got long off the rejection bar, right? Or not off the rejection bar, but the bar next to, okay? And that would have give you a long opportunity, obviously, to ride this thing up. And you're paying attention as price continues to climb. Where are these profit taking bars coming in? Is it coming in? Well, you've seen one right here, right? That was profit taking. So you would understand, hey, maybe this isn't the end of the move, obviously, because it keeps, it just keeps rising. You wouldn't want to take your whole position off there, but you might want to take a little bit. And it's up to you how you want to utilize this long down here. You can use like a pivot point of some sort. Just throw you some pivot points in here. You can throw you some Fibonacci pivot points in here. It just all depends on what you do. Now, if you follow some of my other work, ahead of time that I really think this NQ kind of rotates around 13.75 points all the time. I think that's what it does. So all of my work's based upon that, realistically. So how I would personally trade this, right? The way I personally trade this is I'm going to utilize my Bollinger Bands. I always do. I love them, and I wouldn't trade them for anything in the world. They're beautiful. They work so great for me. But they tell me a whole lot of information is what they do. So that's me plotting my Bollinger Bands there, and there's nothing super special about them. They have a length of 15, and they have a standard deviation of 2.21. It's kind of my go-to setting I've used for a long time. But anyhow, that's them. I don't really worry about the center line. I just delete it. I just worry about the top and the bottom. That's all I worry about. Well, then the way I would play this trade would be, I can rate this thing, right? So is this an A+ setup, an A setup, or a B setup? You know what I mean? In my mind, this is the way I would take this trade with me using my Bollinger Bands. A lot of people don't like them, but I love them. And I'll show you why. So this is going to be an A+ setup for me, because we showed that we had trapped sellers. We went up above it. We come back in and rejected off the box, right? So we could have been long right off the box. Well, I most likely would have not. I could have. I don't know what I would have done right there. I didn't get long off of it, but I don't know what I would have done. I don't know if I would have got long right here or I would have waited over here, because this is going to be my A+ setup. I'll show you the. Let me get my drawing tool out here. So you see that Bollinger Band poke right here? See how it poked through that Bollinger Band and then just blasted off of it? That is the ideal entry for me. I want to see that in almost every one of my setups if I'm really wanting to be this an A+. To me, this is an A setup. right? That makes it an A plus setup. Okay. And what I'll do is from that low of that Bollinger Band poke, right? I'll go ahead and delete it so it makes it easier to see. I like that. Let me find the low. Let me get my calculator right here. All right, so that low is 14,969.5. Okay. I'm going to take that number, the low of this candlestick right here. I'm going to take the low of it and I'm going to add 13.75 points to it. And that gives me 98325. 14,983. Okay. I'm going to plot a line right here. Okay. So if I got long off of this Bollinger Band poke, my first profit target is going to be right here. Okay. So I got long here. There is my first profit target, right? Now, I like to get long these things minimally 5. I mean, not everybody can do that. I understand that, but I like to try to get them long at least 5 contracts or 5, whether it be 5 contracts, 5 blocks of 2, 5 blocks of 3, whatever it is. I like to get long at least 5 of them. And it can be 5 micros if you can't afford 5 full minis, whatever. That's irrelevant. What's relevant is the process here. So that was our first 13.75, right? We've identified the trap. Okay. Now you've got people in here that are getting squeezed, right? Well, you just seen the squeeze. Now you've got folks in here that's trying to revenge trade this thing, and this thing's just running against them. Do you know what I mean? Okay, so we're going to go take this number and we're going to add another 13.75 points to that number. And that's giving us 14,997. Let me get it down here. All right. So I would have got rid of my second. So if I'm going to speak if I'm trading this. Okay. I got rid of a block of 3 here. Okay. I would have gotten rid of another block of 3 right there. Okay. I'm going to add another 13.75 to it, and that gives us 1510. 1510.75. Okay. I would have gotten rid of another block of 3 right there. Okay, so far you're in this thing for 13.75, another 13.75, and another 13.75. So you're what is this? What would that be on a mini? That's it's that 200 and that'd be what 2? I'd have to do the math on that. That's a little over $200 right there. That's probably about, I think that's about 500 bucks. I think that one there's about $800. So
for 13.25 points.
So what was that again? I'm sorry.
275 per.
Okay, so on that first one, you got rid of it at $275 if you're just one contract long, right? This next one would be 275, so it would be about a little over $500, wouldn't it? Yeah. 1375, 1375.
It'd be like 550.
There you go. And then this third one, if you added another 1375, that'd be 800 and something, I believe. Yeah, so
825.
All right. So I mean, so far you're digging it with 3 contracts. You know what I mean? And say you're long 5, right? So what you would do is on that 4th and 5th contract, you just keep moving your stop up, right? So if this got took out, you sold this contract, take these stops that were at break even by now and move them up here. Okay. And when this third target got hit, move your stops up to this level. Because if this thing's going to run, it's going to continue to run. It's not going to come back down and take you out. So on your 4th and 5th contracts, you would have gotten stopped out right here. You know what I mean? So you would have got stopped out right there. So you would have made 550, 550, 550. You know, that's six. I don't know what the math is. I mean, I don't know what this trade would have netted, but it damn sure would have netted a lot with 5 contracts. Yeah, I mean, if you're on $150,000, you know, combine, that's a pretty sporty trade. You know what I mean? Even if you was on 3, you would have got filled out on all 3 of your trades. You know, just with 3 targets. You know what I mean? But this first in right here, it pays for your trade. It always does, and it's a lovely little piece because it that's what it does. It pays for your trade, and all this other is just even better, you know. But that's the 3 to 6 deal right here, right? You just see how that all plays out, okay?
2750 total on that trade.
Okay, well, and that's with 5 contracts.
Correct.
Okay, 2750. Let me make a note of that real quick. If you don't mind helping me out, man, 2750. Keep a running total of this.
Okay.
Well, that way we can go back through and figure out kind of what this day paid like. You know, if you was a hero and did wake up at 3:00 in the morning, you know. So we'll delete these levels because these levels are no longer good now, right? They come back down and stop us out, so we ain't got no use for them things no more. So now we look for that 6:00 hour to roll in here, you know, and kind of what's going on. So we see some late. We know that the market kind of like to rotate around that 6:00 hour, so we're looking for late buys. You know what I mean? Well, you've got a lot of volume come in here at 6 or 5:39. Okay, so what we can do is we can take us a box and draw that rascal right here to there. I don't know what I've done here. Sorry.
You use the rotated rectangle instead of rectangle.
Oh, that's what it was. Yeah, so I draw my box on that candle on the body now. All right. I got my drawing a little off right here. Okay, that lines up perfectly. Okay. All right, so there is our short opportunity, right? Inside this box. I'm going to change it to red so it's a little easier to. So we know the market likes to rotate around that 6:00 hour. So what we're doing is we're looking for a setup in that 6:00 hour for a short position. And remember what I told you about an A+ setup, right? We had the volume come in. Volume's dying off. So volume, in order for this trade to work, the volume shouldn't really be dying off, right? If volume went up right here on this amount of volume, price shouldn't be going lower on lower volume, right? Unless it's a trap. That's the way I look at it. That's the way I interpret this whole deal. Okay. Well, you had late buys that come in, obviously, this amount of volume coming in up here. Well, I'm looking to fade it, right? I'm looking at, you know, maybe some of these guys just bought late and, you know, they're about to get Rochambeau'd on this deal. So I wait for the box to get broken. I come back into it and I'm looking for a rejection candle, right? Now, if I see this setup right here, this don't get no better, right? And when I'm telling you it don't get no better, it just don't get no better. When you got that Bollinger band lined up with the bottom of that box and it pokes through that thing, and you can see it barely poked through it, but it poked through it right there. It does not get any better than that. You could counter trend that trade, and I'll take this trade every day blindfolded for the rest of my life until I just run out of money, I guess. Or just made so much of it I didn't need to do it anymore. You know, but that is the beautiful trades, what I'm trying to tell you. Don't get any better. So you would take your short right there off that candle. So we know we've identified the short. It was the box. So I'm going to take that high of that candle. Get the calculator out here. It's a 15,007.5. And I'm going to subtract 13.75 from that. and that gives me 14,993.75. 14,993.75. Okay, that's my first target right there. All right. Now, granted, I'm getting short five contracts of something, blocks of 1, 2, or 3, or whatever it is. I'm getting short 5 right there. So that's our first target, right? So let's go ahead and just set some targets out. Our next one would be 14,980. All right. And then we'll set us another one out at 14,966. 25. Okay, so we got us 3 contracts out. Let's set us out another one at 14,952. 14,955. Okay, and we'll set us another one out at 14,938.75. 3875. Okay. So if you guys follow some of my work, you know I like to talk about, 5-legged moves and 3-legged moves. You know what I mean? It's unorthodox as all get out, I'm sure, and it is to most people's belief in the way that stuff works. But that's just the way I do things. I like to see markets move in 5-legged moves, for a full move. 3-legged moves to me are pullbacks, of some degree or some type of correction. But anyhow, keeping all that in mind is what I'm trying to tell you is when you see you see 5 targets get hit, don't expect that thing to keep running downward or whatever direction it was being traded in. You could think, all right, we've probably seen about the end of that deal. You know what I mean? That's kind of the way I look at that. So let's just mark this thing up. So we're short from there. We've hit target 1. I actually took this trade, by the way. I don't know if anybody remembers Friday, this short, but I took this short on exactly what I'm showing you right now. So that was target 2 got hit. Target 3 got hit. Target 4 got hit. And by the way, this was a risky deal. I was very aware of this. Holding a short trade into the open. And you can see this thing kind of did indeed run way back. And if you would have actually put your stop down here, you would have got stopped out on that open. There's no doubt about it. But anyhow, I didn't. I kept my stop up here at break even. So nonetheless, I'm just being straight and honest with you. That's what I done. And then I sold the last one down here. So that was my trade, my short trade, from Friday was off that idea of, we broke below, come back into it, and that's an A+ setup. It does not get any better. We broke the Bollinger Band right at the bottom of that box. You take your short. I mean, I would limit my order in at that. I would know where that Bollinger Band level was. You know what I'm saying? So my limit orders would be sitting right there, waiting to get filled if it backed up into that Bollinger Band. So I'm not sitting here FOMOing into this thing. You know what I mean? It's perfectly fine. It just backs up in there and takes me. And off to the races we go, Daggum, I just moved that one. Don't remember where it was. Anyhow, we're going to delete it anyhow. But anyhow, you guys see the idea of why I took that trade the way I took that trade, right? And so when you see them 1, 2, 3, 4, 5 targets get hit, it's probably a good time to think about, all right, well, the market probably is going to start to try to figure out how to go back the other way in some corrective way or something. Something's going to happen down here. So you just be mindful of that kind of situation. I gotta figure this out because we got to keep a running total of what we've made here.
Well, if we're using 5 targets in the last one, we're at 5,500. Because it's the same amount. Or never mind, I'm wrong.
Yeah, it would be much different. So we know that's 275. We know that's 550. We know that is, what was that, 800 and something? And that should be,
It's
Is that 825 and 1100?
yes, so it would be 2750 again. And then whatever the last one gets stopped out at.
yeah, those all 5 hit on that one. So we got 275 plus 550 plus 8. What'd you say it was?
8 and a quarter.
And then the other one was
1100.
1100. So we got 1, 2, 3. Hold on. We got 1, 2, 3, 4, 5 targets hit. What was that 5th one? It's got to be 13. Something like that.
So like 1375.
Yep. It's 13. Yeah. So that trade netted $4,125. Okay.
Just as this was a perfect trade, but you kept your stop at break even on this one from the original entry point where
Oh, you're right.
previously you had moved your stop to the second target once it got hit, right? So
You're right. You know what? You're right. That should be. Let's do it correctly. You're right, because it should be 2750. Yep. You're absolutely correct. Because that's what should have happened.
because most traders are not going to do that, right? They're going to move
Yeah.
their stop as they get taken out of contract.
Mhm.
They're not going to keep it at break even the whole time.
Yep.
And
Yeah. So those would have got stopped out up here.
yeah, especially for myself, I don't know if I would have had the cojones to stay short into the open.
Yeah. And you really shouldn't. Be honest with you. I had a pretty strong bias that we were going to fill out 5. And until you dance with this thing enough, you'll kind of feel things out a little bit better. But to keep yourself safe and just to cover your tail, it always makes sense. Once that next target's hit, move. Well, technically, you would have got stopped out over here. But yeah, move your stops down to the next level. And that way you just kind of cover your own tail. But I like what you're saying, though, man. Keeping the deal honest here.
Hey, Magnum, can I chime in for 1 second?
Yeah, man.
So just to help out, beginning traders stay safe on these types of trades. Can you let the group know, like for instance, on that trade, are you waiting? So 2-part question: are you waiting for the rejection candle? And if so, then the entry would not be at the 2.21 standard deviation. It'd be, I'm guessing, at the close of the rejection candle or the next candle. And then the second part to that question is if that's the case, if you're waiting for a rejection candle to happen, then where is the initial stop loss? Because like that money management is like the most. I think the more important than the targets is the money management starting out this trade. So let them know, I guess, if you can, initially with the mindset, let's just look at that candle. If it rejects, where do you think a stop loss should be? Should it be behind the rejection candle, or are we using the whole zone as a stop loss?
I think that you should always try to use this whole zone as a stop loss. That way you're not just going to get constantly stopped out right here for a beginning trader. Because I feel like a beginning trader, if the more experience you're going to have, you're okay with those stop losses because you can re-enter.
Correct.
But these quick little break evens, they may offer you a ton of FOMO, and you actually get in down here somewhere, which would suck. You know what I mean?
Correct.
But what I would do is, you've seen this rejection candle, I would probably put my my limit order below the body of this candle, and let this candle right here be the trigger that puts you in the position.
Makes
right?
sense.
Yeah. That's what I would do.
And then use the top of that zone as your initial stop loss?
Yeah. Yeah.
Okay.
Yeah. That's exactly what I would do. Because, I mean, if this move truly works, you could use that initial stop loss. But body of this candle should offer you some resistance, right? And which it did. You know what I mean? It did really come back up. It might have took you out right here if you pulled it to break even, as this move was happening. It probably would have took you out right there. And it'd been hard to get another entry in here, and feel good about it.
Makes sense.
Yeah. So I would put it right there. And once this move kind of broke down, which you can see where it broke down at, right here is where it broke down, maybe feel good about pulling your stops to break even right here. You know what I mean? And there again, that's why it's so important to take that 13.75 first target, is because if this thing goes to pieces and it falls apart on you, you've paid for your trade for sure. You know what I mean? At least that 13.75,
Right.
Yep.
Thanks.
Hey, no problem, man. Yeah, if anybody's got any questions as we go through this thing, man, y'all chime in, because, I'd be crazy to think that I knew it all. You know what I mean? And I might skip over something that somebody might help somebody. That's why we're all here anyhow,
So previously you indicated that you have like a setup for a trendy day, and you usually go off the first, like the largest volume at like at 9:30, around the 9:30. So whatever the largest volume is, you kind of mark that up, and going into it, you see if it's going to be a trendy day. Could you tell us what indicator you're using, and also for everyone that doesn't know, that he's using TradingView right now, for all this setup.
That's it. Yep. Yeah. So I like to utilize the volume at the beginning of the day. So this bar, right? I like to go ahead and just stick me a box on that thing, and I let that thing go out through the whole entire day, until the close of the day. It gives me a lot of information, right? I mean, it's realistically, right, the opening range. I mean, if we're just being not in relative terms of what everybody else thinks of opening range is, but that's what it is, right? You're using the body of the candle. You're not using the top and the bottom. That's just where it happened. And then to me, this is if we can get above this and we show that this is resistance, right? Which we did, we rejected off of it. There's your indecision. You could think about, okay, well, we rejected off of it, right? And so you would have no idea. You would not be thinking any other thing of bearishness in any of this, right? Because you rejected off the top of the box. We broke below it, right? But we never rejected off of it. We actually accepted it. It pulled back into it, and it stayed in it for a minute, and then it finally got above it, and then rejected off of it. So that just told you, hey, we're going to be bullish throughout the day, typically. Now I have another indicator that I use. Let me delete this box real quick. Now I have another indicator that I use. This guy, whoever this guy is, he's pretty good. Novice Hedge Trader Master is what it is. But anyhow, this guy here's got some pretty cool stuff. So you can use these pivot points, and they're pretty good. They're not nothing. Man, they're pretty generic. You know what I mean? They're nothing like the 13.75 levels. They've got their own way about them. You can think of them as you just think of them as targets. You know what I mean? If you wanted to, if that's what you choose. Me personally, I like the 13.75s, but you could utilize them. Well, this guy here's got this little thing. It's a kind of a pivot point deal. And what you're about to see is the previous day high and previous day low. And then he's got this pivot point, like a center point. and I'll go ahead and put it on here. So let me get. So the way this thing works is, so the gray lines is the previous days. So this was Thursday. So the previous day's low is right here, and the previous day's high is right there. Okay. Well, these three levels is what he utilizes as basically a pivot. But the way he utilizes it is if these lines get spaced apart, all right, you would expect some type of a range day, or you'd expect some type of a reversal day. You know what I mean? Where you could probably trade something like a downtrend and then it pop up, or it come up and then come back down and then take off. You know what I mean? It's a reversal type of stuff, or sideways, either or. And then utilizing this strategy, you'll get to a point to where you can validate: are we ranging? Are we going somewhere? You know what I mean? But anyhow, when they're spaced apart like that, that's kind of the way you can utilize it. You expect a range day, or you expect a reversal type of day. Now, when they're really close together like this, banded really close together in relative terms, right? What you see to the left, you can expect like a trending day, whether it be trending down, whether it be trending up. It's all, you gotta define that, because how price action is. It just, nothing's perfect. But that's what it indicates. Kind of gives you a little heads up. Hey, maybe look for something down here toward the bottom, and maybe I can just get in a trade and stay in this thing all day long. And well, you just seen, like at 9:45, it just kind of went down here and took off. And if you would have played that 6 o'clock move, you would have known that fifth leg was down here, and you could have looked and to try to play this reversal. This low down here at market open, and just been long all day long, basically. So that's kind of what tells me, what I use to help me determine, are we going to be trending? Are we going to be sideways? Are we going to be rangy? And you can just, like, I'll have tomorrow's indication right here at market open, here in just a little bit. Because it'll plot that days, and they don't change. You know what I mean? So when they happen, they won't change throughout the day. They stay the same. They don't read plot. And then I utilize, this would be a good example. Since we're already here at market open, got done with that trade. You can always expect volume to come in the first time you ever break the overnight high. Or, yesterday's high or low, right? You can expect volume to come in which it did right there when we broke it. You can always expect some type of volume coming in and around here, okay? Whether it be to the upside or whether it be to the downside. All right, let me get my stuff back straight here. That's the pivot points, by the way. So just heads up, let you know. So if we were trying to trade the open, things get a little funky. Like I said, about 15, 20 minutes in front of it and about 15, 20 minutes behind it, it gets a little funky. So it's hard to get a good position off and feel confident about it, because there's just so much volume coming in so quickly. It's not. You just can't really get confidence behind it. You know what I mean? Because there's just so much happening in a short amount of time. So normally what I'll try to do is wait a few, and figure out where does things settle at, and settle down. I'm okay with missing this stuff right here. You know what I mean? Because I think you probably get in trouble more than it'll ever help you. Yeah, you could have got long here and looked like a hero, and stayed long all day long. But you do that 100 times, how many times that will work out good for you? Probably not many. So let it settle out, and then start finding you some volume coming in here. Well, we knew today was going to be a trending day, right? Or we thought it was going to be a trending day. Well, had you played that 5-legged move down, you would have known, okay, we might rotate back up right here because we are overall in an uptrend. Okay? So now we're looking for potential trap shorts, because we know we should be headed up, right? If we're playing with the trend, the overall trend. So we're looking for where do we poke up real high on some shorts? Well, we couldn't find anything right here. Nothing. Well, it looked like we might have got some longs trapped right here. Well, we could have drawn the box right here and maybe been trying to counter trend trade this. But then again, you got to think, all right, we shouldn't be counter trend trading in an uptrend. You know, you're most likely going to get whacked, and there you would have had a trade fall completely apart against you. Even though we went short earlier, if you would have tried to play this short right here with an indecision, right? You could have put an order right there on that candlestick and let it take you short right here. Could have got down in here, but you would have not gotten filled on anything really much. You could have maybe took a scalp right there and sold it to Bollinger Band, but the odds are you're going to get whacked more than you're going to get anything counter trend trading anything. You know what I mean? You go get in trouble more than you go get rewarded. And as you can see, it didn't work out. And realistically, it didn't even give you a good signal, not a good one. You know, it gave you an indecision bar, right? And then you could have put your trigger here. Right there. You got it short at 1504. You could have sold down here at 1593. That's a lot of risk for a small amount of reward.
So I think for this one, Magnum, I pretty much remember you talking about this. You were long from kind of at the V bottom of the day, which I did I thought was, you know, awesome. But since we're trending up and the shorts aren't working, right? Because you should never go against the market,
Yep.
right? You're just gonna get smoked. What would
Yep.
be a long position in this if you missed the bottom where you were long earlier?
Right here. I'm gonna show you because I mark up that morning, the first 30 minutes on that candle. I mark it up, right? Right there is gonna be your long. So you kind of let price do what it's going to do, and if it's going to go up, right? In the overall grand scheme of things, you know what I mean? That could have been trapped sellers, you know? So what you would do is you would mark that box up. You'd come over here and you would wait. You'd wait for something indecision-wise. Okay, we got a rejection. Well, the very next bar didn't trigger you in at all because it was a pullback right back into the box. So you're looking for that breakout above and then a pullback in. Well, there's your indecision bar. Okay. Well, you could have got triggered in right here and just been long right here at 14,988.5. That would have been your long. Stop would have been down here. And you would have just stayed in this long until you could have hit 13.75 from that level. Okay.
If you remember,
Now,
during that day,
go ahead.
I said that I got long at 13,985 when I saw that the market had picked a direction. So
Yep.
I waited for that entry right there and versus
Okay.
the entry way lower.
Yeah. So this setup right here, if you guys remember what I was saying about the box deal or in the Bollinger Band deal, this is what I would consider an A setup. Not an A plus, but an A setup. But if you don't feel good ever taking a trade off this box and you feel like it's too much risk for you from here, from this trigger mark to the bottom of the box, don't sweat it. You don't have to take this trade because, yes, you're getting the very bottom of the move, you know, in terms of where we're headed, you know, up. You can always look to the right. You don't have to FOMO in this thing anywhere up through here. You wait for a good pullback. And it's kind of the back to the whole momentum strategy that I used to do and still do is I'll always, if I can identify the trend, I will buy a poke through the Bollinger Band always, right? And you would have got one right here, just a few more points up from where you could have initially took a target, took where you got long right here off a trigger, right? At 14,988, you could have gotten long on a limit order at 14,993. You know what I mean? Just a few more points, and you would have had to wait a little bit longer, but you could have been patient, and you would have had a lot less risk on the table. You know what I mean? Than buying it off of this box. because that's a lot of risk. I mean, to some people, that's a lot of risk. You know what I mean? And it really kind of is a lot of risk. So if you don't feel comfortable about that, don't worry about it. Just come right here, look to your right, and wait for this with a limit order. And if you can get a break below that Bollinger Band, a poke through it, there is you a perfect long. And there's no need to having more than a couple point stop loss. Just put your stop below that candle. You see? And then just ride that rascal up. And you can mark your levels up from there, right? 13.75, 13.75. And we can do that. Let's see here.
Hey, Magnum, I
Yep.
wanted to ask you, is there ever a circumstance where you don't build that zone off of the body of the opening candle there?
No, I always do. I always will build a zone off the opening and the closing, because the opening is going to give me the idea, right? Like, let me extend this thing so you know what I'm talking about. So that's the opening range. So what I'm going to do is also on the ending day, like, so the upcoming Globex session that's coming, I'm going to take this candle or this volume bar, excuse me, right here. Right? That's where the most amount of it happened. That's where the most amount of business happened. I'm going to take another box right here, and this is going to tell me what we look like throughout the day or through the evening, through the Globex to market open tomorrow. You know what I mean?
I
Does that make
think
sense?
to reiterate it, I think he was trying to ask like exactly at 9:30 and exactly at 4, but the way I've seen you trade is like the largest volume within the closest time to opening and the largest volume the closest time to close.
That is correct. Yeah, because I mean I mean we're 1 minute off, but yeah, right at as close as we can
Yep.
get.
And then like the other day it was like 9:33 instead of 9:30 that had the largest volume.
Yeah.
You know.
And it's kind of rare that you run into that where it like kind of offsets really far away from it. But sometimes it does, and you just but you still just draw your box up. You know what I mean? Because that just lets you know, are we above yesterday's close, where all the orders come in and started getting filled? Are we below it? Maybe we do pull back away from this. Maybe we look for a short setup right here, Um, you know, it just kind of lets you know where you are in terms of the market goes. You know what I mean? Now, if we get above it and we show that it's resistance, show that it's support, wait, maybe you need to look for trap sellers. You know what I mean? And then ride this thing up, make you some targets up through there. That's just kind of the way I play those morning ranges and evening ranges throughout the next day. Oh, let's see here. I'm gonna go ahead and mark this thing up if I can get. I don't know. But let's keep each other honest here. Where would y'all think it'd be more beneficial to mark this thing up at? I don't know. I just don't know if more people is going to be willing to take this long setup, or they're going to be more willing to take this long setup. I would personally take this one, considering where I got stopped out at, and I think this is the one I did take, to be honest with you. Versus this one, I don't know. I'm gonna mark it up from this one. It only makes sense too, because that's where it indeed rejected or indecision, and then you got your trigger. So that's where I'm gonna put it. We'll do the math from here. So I'm gonna find the low of that. That's 14.9, 98375 plus 13.75. Okay, it's 14.997. Wait a minute. 15, 11, 25.
I'm pretty sure you could find someone that will code indicator every 13.75 points.
Oh yeah, there is. It's right here. Magnum pivots. But it doesn't line up right now. But the thing is like, it needs to come at a rejection. You know what I mean? Like for this to work,
Yep.
because that's the only part. It's like a moving target there, Okay, 25 is the next target. We got another target of 38.75. Got another target of 52.5. Another at 66.25. All right, so it's the way you play it, right? If you seen where this happened, got long at the trigger, well, you would use this bottom candle as your target information, okay? Even though you got long here, well, you got long here, you sold one there, got long, sold another there, all right. I'm trying to figure out how you would have not got stopped out right here, to be completely honest with you.
If you used break even, you got stopped out.
Yeah. Yep. You would have got stopped out right there.
But granted, you didn't.
No, I didn't, because I spread.
You were holding it down at the actual break even instead of moving it up after your exit.
Yeah. All right, so you would have gotten filled on two, so 275, and then 550, and then let's see, we're just gonna call that a break even. I mean, that's basically a break even. That wouldn't have been. I mean, that just wouldn't have worked out too well. You know what I mean? Like getting it long off the top of that box. Maybe that's the better idea. You know what I mean? Is look for that A+ setup, because if you would have long there, right, you would have good. You know what I mean? You took advantage of the whole move. Maybe we just learned something together right there. You know what I mean? That's probably the better idea, because you would have missed literally out on everything. Once you ticked into that, I do not like that. So we're gonna go 275 plus 550. So we're gonna call this 577. Okay. Now, if we would have took the long, oh my goodness, what have I done? Say we took the long here. Off of this candle. When it actually hit the Bollinger Band and poked through it. Yeah, you could have. I think that's 3 points. You probably wouldn't take that. You know what I mean? I'd take it up here. Got rid of one there. Yeah, I mean, this has been the sportiest trade of them all,
Or wouldn't you just redraw your targets if you went from that long right there?
I would still keep. Yeah, I mean, you could still redraw your targets from here. Yeah, you very well could. I mean, it'd probably be a little more accurate, you know what I mean? But nonetheless, this is where it rejected from, so this is kind of the area in which it, really matters. The problem is just, if you'd moved your stop up here, from whenever this second target got hit, if you moved your stop up in here and behind it, the second level, um, you would have got smacked. Maybe you could have put it up and underneath that low, when it pulled back into it and come back. But, it's going to be so hard because this is one of the nuances, right? This is what you're going to find. So you're not going to be able to have a completely repeatable process to where it makes sense, I guess if you did come, you did get long off here, it come up, hit the first target. Maybe you take your stops and move them, you know, just below this low. You know, obviously it would be break even.
But I mean, that's kind of the strategy, though. That's the risk mitigation. So yeah, you don't get the big bucks out of it because you got to break even, but you follow the strategy and you follow your risk, and so you're still making money at the end of the day. It's just not as much as you would hope.
Yeah. Yeah, I just don't like that, right? I mean, you're going to get. I'm just trying to figure out how else I could explain this to where you would not have missed out on the biggest move of the day, right? Because that's the idea of this strategy, is to get you in this biggest move of the day. So, I mean, the last thing you want to do is get stopped out right here and watch it run up all day long. That's just crazy. I'm thinking that's probably what we just need to focus on is these Bollinger Band pokes. Once you break above that box, look to buy these, because this is where the FOMO happens. You know what I mean? Like, or the Momo strategy comes into play. You buying these Bollinger Band pokes, and as long as all this is still intact, you know what I mean? Like, you're not seeing these big, huge sell bars, up here at the top that are just pushing this thing down. But then you see sales get loaded up down here on the bottom where opportunity lies, and it squeezes back up against them. That's what we need to be paying attention to, is these lower band Bollinger Band pokes rather than the box itself on a situation like this, because you would have got stopped out. And that's not really acceptable. You know what I mean? I mean, if you just moved it to break even, but I mean, there again, you didn't hit two targets, 275, 550. It doesn't make sense to pull it back down.
Yeah, and you also have another opportunity at the 15,011 mark, Magnum.
Yeah.
Right there.
Yep, you could have got long again.
You could have got with the Bollinger Band strategy and the box strategy, right?
Yep.
Because you have the sell bar coming in right there, and then you've got a large buy bar, and there's your zone right before the sell bar, and then there's the poke back of it. So you've got kind of like a triple confluence, right? You've got the Bollinger Band poke, the little small box, and then a rejection off the box before the big move of the day happens, right?
Yep.
So even though you might not have gotten the move from the 14,985, which everyone always wants to buy at the lowest, you paid yourself along the way, you got stopped out it, and then there was another move shortly thereafter that you could have got back in and moved and made clean money the rest of the time, right? Because from there, it's target after target after target with no worries of break even.
Yep,
that's it. You see what happened, so it's easy to sit here and say, oh yeah, it's all easy money, right? But you don't, it could have easily reversed the other way, right? And went and down, and you would have been stopped out for 5 points, 6 points. So you would have gave back some profit that you already made, but then you look for the next opportunity. So I still think there was validity to the initial long, and then the break, the stop out, and then another long shortly thereafter.
Yep.
And if anything, the A+ setup would be further in towards that 15,011 mark, because you have a Bollinger Band pop, Bollinger Band strike twice, and your volume rectangles.
Yep. Yeah, there was a lot of confluence right there for sure. I agree. Yeah, I mean, I guess that's about the only way to be honest about this, would be just as you explained, man. That would be it. I mean, take your long here, the initial long, knowing this is an A setup, right? Not an A+. Get paid on 2, get stopped out on 3, look for a re-entry, and not have to FOMO in. you know, and then bada bing, bada boom. You're back long 5, and it's just 1, 2, 3, 4, and probably 5, you know? Yeah, you're right. I mean, that's the best way to be honest about this, you know. Even in hindsight, it's you're right. That would make sense. Yeah. Yeah. Yeah, I like what you said there, though. That does make a lot. I mean, that does make it even easier to see, right? There, even if you did get stopped out, don't freak out, right? Because you know you did right. You got paid $275 on one. You got paid $550 on the other. Um, you know, and really, you got paid $275 on 4. Yeah, there you go. So I mean, you would have been. Well, that's pretty good money. I mean, either way you slice or dice it. I mean, 275 on 4 and 550 on 1. And you didn't even get the move started. You know what I mean? You could have relonged right there. 'Cause nothing suggests that you shouldn't, you know. If anything, that kind of uh reloaded the A plus deal almost. That Bollinger Band poke. Yeah.
Depending on how conservative or how aggressive you want to be, you could move two to the first level and leave 1 at the original break even level, and that way you're still in for the ride, just in case it does happen to make that big move up with at least 1 contract too.
There you go. That's another way to play it. Absolutely.
Scale out the same way you might scale in.
Yep. Makes perfect sense. Yeah. I mean, that would be another way to play it. I agree.
Or leave 1 at the 1 and 2 at the original break even if you're more aggressive. You know, it's just all how you want to play.
Yep. I like it. Yeah. There's very much a way you could still been in this trade for sure. But even if you did get stopped out of all of them, you would know there was zero need to FOMO in at any of these, areas up in here. You had an opportunity to buy back at the very lows. You know what I mean? Just knowing that, I guess, would help some newer folks with the FOMO stuff. Trying to do what? That's absolutely correct. Yep. Yep. You're absolutely right. Couldn't agree more. Could not agree more. Yeah. So hindsight, for me, I did take this trade. However, I just kept my stops down here, and I just sold them off at each individual level. You know what I mean? That's the way I played the trade. I just trying to keep the risk, structures close to tight as possible for everybody, because everybody's risk is different, But that's the way I played the trade.
Question, Magnum.
Yeah.
What about that volume bar right there? So I'm trying to do 2 strings. Go back down. It's right there after the tall one. So you've got the 2 volume green bars, and then you got the volume red bar on the very. Keep going.
The left or right?
Left.
Okay.
Left. One more. Keep going. You see the big spike up right there? All right. So yeah, that negative bar right there. Wouldn't you just draw a box on that?
This bar. Hold on a second.
Nope.
That bar right there.
Nope. The next one. Up to your right. Right more. Keep going. see the big volume. You got the two big volume bars. You got the one and you got the smaller one. Wouldn't you draw? Yeah, right there.
Okay, so this right here to me,
Yep,
is so you've got profit taking going on right now is what you're seeing. So this bar right here that you're seeing, that's indicative of folks taking profit. That's all that is. You really want to see these big volume bars if you're looking to find trap traders. You're looking for pullbacks to buy is what you're looking for, but you're looking for people to short at the bottom of that pullback. So realistically, if you're looking at the Bollinger Bands, that's kind of the top. So you really wouldn't want to be trying to trade off that top. You would ideally want to be looking somewhere down here at the bottom of that pullback, closer to your bottom Bollinger Band. That would be indicative of trap sellers, is what that would be. But that's just more of profit taking. So if you see that big volume bar come in somewhere toward the top of that top Bollinger Band, and folks are taking some profit right there. That's all. That's the way I would interpret that. Whereas like right here, well, no, never mind. That didn't. Right here, you would see an opportunity, right? You see this little bit of a pullback where you see volume come in. Yeah, it's not significant. You would consider that to be profit taking, right? Volume coming in higher, but it's at the top of the Bollinger Band. Well, you see this one here, it's mid-range of the Bollinger Band, but it's still high. You would consider that more of sellers jumping in, maybe a little bit late on the process. Well, you could draw you a box off of that one, right here, and that would almost give you an A+ setup too, where it poked the Bollinger Band at the box and took off. Yeah. Yeah, I mean, using this strategy, I found there's very little days that you don't make 50 points plus. You know. Yep. I agree. Yep. Yep. Yep.
What is your configuration of moving average with your volume?
All that is just let me show you what it is. Volume flow, this guy, whatever it is, depth house. Basically what it is just you've got bullish volume. Let me see what the inputs on it is. Moving average type, simple. Got a 14 moving average, I guess. It's something I don't really pay attention to this factor for breakout candle. I don't really even know what that is, to be honest with you. All I look for, and basically what that means is like some of these bright colored ones. I don't pay attention to the bright colored ones or the other colored ones. To be honest, I just make sure that we're coming out and above these two moving averages. That's all it is. And then at the end of the day, it just tells me, so when the green line's above the red, you've got more buying pressure than you've got selling pressure.
That's pretty good.
Yeah, I mean, it works pretty good, but the biggest thing that I look for is just when do we go above them? You know what I mean? And that guy just kind of lets me know, hey, we've got some excess volume being put in for some reason, and what does that mean is the way I go about it. So we just kept following price. So you see this big volume bar right here as this thing moves. Somebody just took some profit there. That doesn't mean that, some sellers have gotten trapped. To me, that doesn't mean that. That's all that means to me is just somebody decided to take some profit. I really look for when this thing comes back into the bottom side of it, like the bottom of a pullback, that's when I really start to pay attention to these volumes, and because that's where I'm looking to the right to play it. Right here we had some volume come in, but it's toward the top. To me that's indicative of just some more profit taking. But I mean, all this tells me is there's no reason to get out of the trade yet. You know what I mean? It's pretty healthy. Now we get over here, we start to see some different stuff, right? We see some big volume come in at the bottom, right? So you could draw, I ain't even gonna draw a box on that little bitty one. I'm just gonna draw a line. Be easier. Yeah. So we'll utilize that line, okay? Well, if we look to the right, where could we have gotten involved in that? Volume is dying off, so there's no reason to be concerned about anything. The trade's still valid. Well, to me, this is an A+ setup, right? We look to the right, we busted above it, come back to it. We didn't really get a rejection on any of these. There was your maybe indecision. You could have put an order there and got filled over here. But if you look right here, we had a rejection of that, or had a poke through that Bollinger Band. So you could have got long off of that. And then that would have been a fresh long opportunity just to stay long. And then you could just, even from right here, right? Let's mark this guy up. Oh, what is that? That's a low of 15.
It's like a pullback of order block, no?
Pullback of what?
On the order block.
On some of my other stuff, some of the other like Magna Cloud stuff, some of the Momo stuff, is that what you're talking about?
I think he's saying the little block that you would draw.
Oh yeah. Yeah. 725. So you could have put your target there. 91. Four. 0475. You wouldn't have got filled but 3 of them. But anyhow, nonetheless, there was your box. This line is representative of the box. But anyhow, you got long here. You could have got rid of 1 here. You could have got rid of 2 here. And you could have got rid of 3 there. Just using the 13.75 levels. So, that's there again. That's 275, 550, and 800 and something. But I mean, that late in the day and that big of a run, it'd be hard to get convinced. Say, hey, we're going to run higher. You squeeze more. Be taking fresh longs at the very top of the day. But this kind of stuff gives you the confidence to take that long, right? Knowing that sales come in late, and then price come above, come back into it, and then off she goes, a fresh squeeze. Happens all the time.
So I have a question. So when there's 2 large volumes of bodies of volume that come in, and it's just going sideways, how do you kind of differentiate between that? So like on the ES on Friday, the same thing happened, but it was going more sideways, and it was stuck between those 2 large volumes. There was a large buying volume and a large selling volume, and it just stayed stagnant in between the 2.
Okay, we'll look at ES here in just a hot second if you want to. We'll go through it, see what we got. But and also in late in the day like this right here. So when you get within 20-30 minutes of the close, you got to understand something, Mo. If you break this whole day up into pieces, all right, you've got folks that's made money from the 3 to 6 hour. You've got folks from 6 to 9, 9:30ish, whatever, making money. And then folks from 9:30 to around 12, they making money. All right, everybody that's trading after lunch, they're trying, most likely, are trying to get back what they lost. You know what I mean? So as you get later in the day, always remember things are not going to be as precise and things will not work in your favor quite as much as they would have the second, or the other 3/4 of the days, right? So say this is a quarter, and a quarter. Well, these 3/4 right here is paying the bills. This one right here, anybody typically who's participating in this area is most likely either A, trying to learn something, or ain't got nothing else to do, or trying to get back what they lost, either in this quarter, that quarter, or that quarter. So keep in mind, who's your competition up here, and how sloppy does it get up here? You know what I'm saying? From that 12 o'clock onward. It's not. I'm not saying it's not tradable, but I'm saying it does not get easier to trade. It actually gets harder. So yeah, just throw that out there. But the idea, I think you guys got the idea of what it is here that's trying to get done. We're trying to find these sellers being trapped and run price against it. That's all. And there again, you can use whatever kind of pivot points you prefer. It don't matter. I personally use 13.75 on the NQ because I think price rotates around that structure. It tries to build structure around that 13.75. And I think it on the ES, I believe, it tries to build around 4 points of structure. So I utilize that count on the ES as well, but not 13.7. I'd use 4. We'll look at the ES though, because he had a question on the ES. When
I
it
was
was.
just getting ready to ask you. Sorry, go ahead.
I was just saying, does anybody have a time in which they had a question about the ES? We'll look at it.
Well, what he was talking about with the Bollinger bands, when they get real tight, that's when volatility is contracting, and I typically won't even look at it at that time as far as trading it. But if you don't mind me asking, I think this is absolutely brilliant. How did you stumble across the 13.75 levels?
Just watching these things so long, man. I mean, if you trade these markets long enough and look at these things, how far this thing moves before it pulls back. And then 90% of my work that I've done for the last 6-7 years have been on 1 minute and 5 minute time frames. So, it's just like anything else you track a lot. You understand its movements. Where an opportunity lasts and where it don't. But, and it also revolves around like where do most people put stops and where do they pain themselves at, that's it.
Yeah, I just went through the charting as you were going through it, went through a bunch of charts, and it lined up like magic, and it's very impressive. And I appreciate you, turning us on to this. Thank you.
No problem. Now I rarely trade the ES on a 1 minute, because it just the ES is like a snail, and it's hard to watch this on a 1 minute. But anywho, I don't know. We'll just so I trade the ES on a 3 or a 5 if it's a time based chart. It's easier to see. So we'll do the 3, 6, and 9. So we got volume coming in here at 3 o'clock in the morning. Right there. So we draw a rectangle up. Well, there's your rejection candles. Put your trigger above it. Right there is your long. So I guess we could go right here at let me find what that low is. 43.7250. 72.5. We'll add 4 points of structure to her. So it's 76.5. So that'd be first target. You add 4 more to it. That'd be 80.5. and you would have never got filled on that third one before you would have got taken out. So there was, you could have got long here. Had been 8 points. You could have made on the ES on that little 3 o'clock hour trade. Well, 6 o'clock, the rotation of the 6 o'clock deal, right? Let's delete these. We had a lot of volume come in. We see that right here. So we draw another box up on that top of volume. We know that the market kind of rotates around that. And now we see our golden setup, right? I say golden, whatever. It's, it's A plus in my book. When you can get back into that rectangle and you can get above that Bollinger Band, I'll take that trade all day long. So, you would have only gotten filled on one of them anyhow. So from 81 to 70, yeah, you only would have got filled on 4 points of structure. But you would have got filled on one contract and you would have got stopped out on the rest at whatever break even, because you would have moved them to break even when that first target got hit, and you would have got stopped out right there. One thing to be mindful of is when you're trading on a bigger time frame like this, 3 minutes seems like a small time frame. But when you're trading like this, 3 minutes is a long time, because it takes so long for these things to line up and work themselves out, While you're sitting here waiting, folks are getting their ass kicked right through here. You know what I mean? And you don't even have to worry about it. So that's the beauty of it. Here's the opening range. Let me delete this guy. Actually, let me just move him. Be easier. There you go. There's the opening piece. Well, there's your rejection candle as well. Yeah, let me get it right here. So there's your opening. Come back above. Right back. It rejected off of it. So you're going to put your trigger right here, right at 30, 43, 41. And you just mark your 4 points up all the way up until you've stopped yourself out. You know what I mean? That's all you would have to do. But right here, you would know, you see this big volume bar come in at the top. There's a lot of folks taking profit right here in this bottom, or in this top, And there again, see how close we are to that 12 o'clock area that I was telling you about? How things just kind of, you had 3 quarters, right? You had your first quarter, second quarter, third quarter. Everybody makes money in those 3 quarters. Well, these folks right here typically are trying to get back what they lost in one of these 3 quarters. So be mindful of all that. But anyhow, you've seen this big volume come in right here, and you would know that there is some serious profit taking going on right there. That's not no joke. That's pretty serious stuff. Like there was some profit taken right here, That's all it was. I mean, it wasn't, wasn't look for a short opportunity. We already knew that, we're well above the opening. So you just watch price just walk its way up. And then you look for potential short pullback opportunities, and they just really weren't any. You had that one opportunity in the morning, and the rest of this stuff is just, you ain't got a whole lot of nothing going on. If you wanted to be pretty wild about it, you might have could have looked into this little area, but it ain't played itself out. And that's what I was talking about, how you kind of get yourself in a bad spot looking at this late in the day type of stuff. Say you did take this potential short, this potential long right here, being that you were long biased, as you should have been. It'd probably be easier to do that as a box. And then, in relative terms, it's not a lot of volume, but in relative terms, it's more than, it'd be enough to pay attention to. You know what I mean? You could have interpreted that, in a real-time setting, that was an opportunity. for a long. You would have never entered the trade. I take that back. You would have entered the trade right here if you had entered it on the idea of putting you a order above the trigger, above the rejection bar. That is 100% a rejection bar. Granted, you didn't really get above it and pull back into it, but I could see how somebody could have took that and took that long, put an order above here and would have got long right here at 44.02. And I mean, you immediately got stopped out, but I could see how that happened. But now if we come back down here, just a couple bars later, we get a big volume bar come in right here. And now this might be an interesting opportunity. So price come down, come back up. Never really rejected off of it. It did right there, but you never really kind of got anything thereafter. But we've poked through the Bollinger Band into this box. The only thing that would worry me about taking a long right here would be, this closing volume right here. Otherwise, this would be a long all day long. Like you would take this and feel good about it. You know what I mean? For higher prices. I would have to look for another opportunity just because this big, huge volume bar come in here at the end of the close. But, there again, that's what you get into right at the end of the day, 30 minutes before or whatever, 15, 20 minutes, 30 minutes before, things get a little crazy in terms of volume coming in and coming out. So, yeah. 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 I mean, it's the follow through, right? I really think that this time slot from 12 o'clock onward is designed to be lucrative to the people who have lost in one of these three quarters, from the 3 to 6 and from the 6 to 9, and then from the 9 to 12. Whoever lost money in those quarters is trying to make it back right here, and the market punishes them. You know what I mean? In that time slot. Yeah, I do think. Well, I've done a whole lot of talking, and I probably done a little bit less explaining than I probably should have. So if anybody's got any questions, this might be hung up on anything. Let's hash it out and figure out what we can talk about.
Yeah, question.
Yeah.
Obviously, with your other strategy too, anything news release wise, Fed speaking, all that, everything just gets tossed out of the water.
That is correct. Yeah, you can't, if it's big economic news, if it's big, Fed talk, I mean, there's, you know what I mean? It's the risk. They'll run it on either side of whatever potential move you had that, you're going to get stopped out. So it's
now,
not worth it.
Yeah, with the this is strictly on 1 minute. Have you done this on a 5 minute?
You can do this on any time frame. It's just the bigger the time frame, the bigger the stops. So, or the less opportunities is best to say. So they're a little easier to see on a bigger time frame. Let me delete some of this stuff so we can see. Like if you see a 1 minute setup and it don't make no sense, just go to your bigger time frame and you might find out that it was a setup on a bigger time frame. Or if you are looking at a couple different time frames, then maybe you could, maybe it made sense to you. Let's see. They wasn't nothing Friday. Now here might be a good setup. Look, if we look going on right here. So we've got a late sale in a pullback. Okay. Well, this might be an opportunity to look, you know what I mean? To look from this box of 15,104. If we can get above it and pull back into it, we might take off from that level. Just something to be mindful of. Let's see. Opportunity. I mean, there was your rejection. Or, I mean, an indecision, I guess. That would be an indecision. You didn't really get a good setup right there on that 5 minute. You missed that whole move on the 5 minute chart.
So basically, you're waiting on the 9, 12, 3, 6 hour time frames, like inside of it. Is basically the strategy.
Because I want to capture where the market moves the most away from whatever particular price. If I can find the rotation area, in terms of the time slot, then I can determine who got trapped. Because that's the idea. It's to trap as many folks as you can, and whatever way you trapped them, they're going to they're going to come right behind you, pushing your order to even higher prices or lower prices, which is good for you. You know what I mean? In terms of your trade. So, and that's the idea behind all this is you find those rotational areas and then you find out the direction via this little strategy here. And then you just run with it, and you mark out your 13.75 levels or, throw you pivot points out there and you trade to them and just take you some profit all along the way. And you'll end up, 75 to, 25, 35, 75, 150 points a day, whatever the market can give you. And you're not even really having to guess about it. You know what I mean? It's just whatever the market can give you and wherever money's being positioned to push it. You just want to be a part of the move.
Appreciate it, Magnum.
Hey, no problem, bro.
Magnum, about a week ago, you took a really big short, and I think you made between 40 or 50 grand. It was, you said, one of your best days. Can you show us that short? And the reason that I ask that is because you're talking about, wanting to take trades with the trend of the market. And if we're talking about the trend really looking up, how did you find that short if we are trending up?
Do you know what day that was?
That was, I think,
I can't remember.
I want to say it was the 15th, possibly?
15th.
Somewhere right in there.
Hmm.
No, it wasn't. It was a week and a half ago, and I'm just trying to find out if we're following the trend going up, how do you find such a large short? I just want to map that out.
It would have made sense on the 15th if I was. I mean, ideally, right? I'm looking for lower highs and higher lows. You know what I mean? That tells me where I identify the trend. I bet you I was looking at the VIX.
Got it.
Let me look on the 15th of the VIX. It's so hard for me to go back, like and play back trades like that. So the 15th. I think that's what I was doing. I think I was playing off this gap. Yeah. I think that's what I was doing. I was playing off of this gap. Like, you see this gap right here where my cursor is?
Yeah, I see it.
Yeah. I think I was playing off of that gap is what I was doing. If I was trading the NQ that day, I guess I was.
It looked like the NQ.
Okay. Let me see why I would have took it. If I would have took it, I would have took it either off of a 5 minute or I would have took it off of a 1 minute, either or. And most likely, I would have gotten into that trade somewhere around the 6 o'clock hour, probably. Hmm. I bet you that's it right there.
Was it on the 18th or 19th when the VIX spiked up real high and we had a lot of price action drop overnight?
Was that the day I done it? 18.
I'm looking at my charts here just to identify the day.
Yeah, I can't remember, man. All these days run together for me. Oh. But I'll be more than happy to go over it if I can figure it out. The odds of me taking a big old trade, though, usually would come from me seeing something that's set up at 3 o'clock in the morning and playing off of it maybe around 6 o'clock in the morning or something like that, or something that happened at 6 and playing off of it at 9, typically. Is the way that if it's a big short, it would have seemed like it'd been the first day of a big short if it was a short. You know what I mean? Like something like that, probably.
Yeah, the morning of the 19th.
Morning. Got a box rolled there for some reason. I think I got this for the daily chart. Okay, yeah, I do. Let me go ahead and just remove that. Morning of the 19th. Let's look at the 3 and 6 hours. That's where it would have been happening. 3 o'clock. Probably wasn't trading it on a 5 minute. Let me go to a 1 minute chart. '22nd, 21st, 20th, 19th.
All right, I found it. It's the morning of the 16th. We took a big short and rode that thing all the way down. Short was somewhere around 14,870.
Okay. That would make sense because that was the first day of the short. Yeah.
Right. And you rode that thing all the way down.
Okay. Well, let's just go through. Oh, why in the hell I would have took it though? Damn. What would I have been trading off of? Oh, did I give any idea of why I was doing it? I mean, obviously I know why I was doing it because I seen lower highs, right? I mean, I'm seeing that.
Yeah.
So that would make sense why I would took the short. But I just can't remember off of what time frame I would have took it. It would have had to have been right here. Did I get short at like 9:30 or right at the open?
I'm not sure what time you got short, but I remember it was the
15th.
Was the 15th?
Yeah, it was 15.
So if I got short, it would have had to have been short, me getting short at 3 o'clock in the morning or 6 o'clock in the morning or 9 o'clock in the morning. It would have had to been something of that degree. And I can't imagine. Yeah, it had to be that. I had to have gotten short somewhere around 8 o'clock in the morning.
Right.
That would have probably been it. That would have probably been it. I guess the Bollinger Band. Yeah, it's so hard to say, just not knowing. Was I trading on a 1 minute or was I trading on a 5 minute? Be tough to say. But anyhow, I guess the reason I stayed short in it was because it never gave me a reason to not to get out. That's probably what it was. Here we are, the 15th. Yeah, I can try to make some sense of this, just to try to help.
Yeah, Magnum. I think it was on the 15th.
Okay.
I think because the short price looks to be around 14, right at 14.9. I think it's right before the fall to 14.8, so it's like a full 100-point drop.
I would have took it right at the open.
Yeah, right there.
Yeah. Well, that would have been it right there. The Bollinger Band poke on this right here. Yeah, that's where I would have took it. Based off of this level. That would have had to been it.
Yeah, it was like you took 900 down to 800, and then you reshorted again at 820 and took it down to 740.
820, 740.
The next wave up, yeah. Go up.
So I shorted here.
Yeah,
again?
14,000. I guess between around 820, 825, 830, somewhere in there.
How the hell did I do that?
And then you wrote it to 14,740, 50 area.
Was I even trading this strategy on the 15th?
I don't think so, honestly.
Because I'm not seeing this strategy line up with it. Like, it doesn't make a lot of sense. Had to have been trading something else.
I'm looking at your the chart that you posted into the chat room, but the chart has no timestamps at the bottom, so I can't tell you if it's a 1 minute, if it's a daily, if it's a.
I wonder if it's probably a momentum range chart.
Maybe that's what it is.
Yeah,
because it doesn't look like the chart you have up right now. So.
Yeah, it had to be a momentum range chart then. That's if it was a momentum range chart, then obviously I was looking for a 310 divergence, which is a different indicator down here, and then a hammer bar through the Bollinger Band. You know what I mean? And then sell it back down. That's what it had to be.
That sounds right.
Yeah. Yeah, man, it's just I need to start putting up what I'm trading when I'm trading, I guess, because I trade so many different ways that might be hard to keep up.
And if you ever want to look, the chart is a July 15th at 3:41 p.m. is the timestamp on your post in the chat room. So.
It had to be what it was, because this strategy does not line up. You know what I mean? Like, the only thing that I seen would have been right here at the open, but why would I have short there? And
it's not definitely not the 1 minute chart. It's the same day, but it's not the 1 minute chart.
Yeah. Hell, it'd be 15th. Let me try it on a 5 minute chart, see if it lines up. 15th. I could have seen me get short right there at 840. That would make sense. But what I don't see would be me getting long or getting short again at 820.
Yeah, right there. You got short again. All right,
Yeah.
820. Yep.
Not with this strategy, anyhow. Yeah, it would too. That I was using a 5-minute chart.
Yeah,
Look,
that looks familiar. Yeah.
Yeah, because I would have gotten short right here off of. Where the hell did I get short right there?
Did you use that doji candle as the volume?
I think I had to have.
Yeah.
I think I had to use this with a Bollinger Band poke. Took the short, wrote it down, and then turned around and used this bar, right? And probably this doji as the
short again. Yeah.
as the short again. That would have had to have been what I done. If I was trading this 5-minute chart. You know what I mean?
Yeah.
Hard to say, not really documented it that well, you know.
Thank you for showing us.
No problem, man. Wished I could have been a little more clear on it, but that's about it.
So Magnum, on the 19th, we had a 2% drop. To swing that for several hours, would you just use the same strategy?
Let's see here. How we could have played the 19th with this strategy. Oh, all right. So 19th here. Let's look at 3 o'clock in the morning. That usually gives us a good spot to think about rotations. Ain't nothing long there. Let's get us an idea. So the 19th, we're making lower highs. And lower lows. So we know the trend is down. All right. That gives us some indication of what we're doing. So we're looking for trap sellers up top. And that looks like a pretty decent spot right there. But then again, he ain't got nothing rejecting off of it, so that's not too good. So 3 o'clock, we're not looking for sales. We're not looking for trap sellers. We're looking for trap buyers. That's not indicative of trap buyer right here. Well, yeah, there you go. No, that wouldn't work either. Yeah, you wouldn't have had nothing on a 5-minute chart. And from 3 to 9. Now let's look at market open. Nothing. You could have got an opportunity right here on that candle. But I don't know. Yeah, you wouldn't have got much. I don't see nothing on a 1 minute. On a 5-minute. Yeah, I think you may end up having to dial it down to a 1 minute for it to make sense. Let's go on a 1 minute. $20.
Mag, you know you can jump dates on the bottom, right, on TradingView?
No.
There's a little under the 11 o'clock there. There's a little 9 o'clock now. Yeah, that little box with the arrow.
Man, you got to be kidding me.
To the right of the all. Yeah, right underneath, right there, the rectangle box. You click that, right? Yeah, right. Yeah, there you go.
Really?
To the right of all. Yeah, that's it.
Oh. Wow.
Makes it a lot easier for me.
Man, look at you. Look at you.
Look at you with those bag of tricks.
Man, I'm telling you, I told you, I'm still frustrated. You got to click shit twice to make something happen on the computer. It's driving me nuts still. Okay, let's look at. All right, 3 o'clock in the morning, maybe some type of rotation. We got some trap sellers. Don't really give you much. I mean, there's nothing here that I see that would be worth taking. Might have could have got something right there, but nothing much. But then again, look for trap sellers. Trap sellers. Nope. Nope. Oh. I just don't really see nothing there. Around the 6 o'clock hour. Be a rare deal where you get a box within a box right here. Yeah. I mean, the only opportunity you would have would be maybe take a short off this Bollinger Band, or really any of those three, and just keep you stopped back here and behind it, and then short it. I mean, there was nothing clean about it. You know what I mean? Like it was not um, a clean setup. I mean, you could have took it off. You could have took it at at the six. That same thinking of the 6 o'clock rotation hour, right? That the market might rotate down and look for traps, trap buyers up here, which you've seen 2 sets of them actually. And then took a short off the Bollinger Band pokes, and then just kept you stopping behind it. And then once the price broke down this bottom line of structure, movie stops to break even, and then just take your dang, that thing went down a long ways on a 1 minute chart. And yeah, and just take your 13.75 levels and just line them down until it just didn't work no more. But that would ideally give you a good spot, at least for let price back into. I mean, that's very little risk, really. Say you took the first one here, 622. Top of your box is 629. I mean, that's you're not talking about much risk at all. You could have loaded on this first poke of it and been just fine. I hope that answers some of your questions there, though.
Yes, thank you.
Don't see how I could get a play in. You know what? You might have had a play over here. So this is the start of Globex. So let's look at 1600. Let's look at the close right here. It's that bar. And this is what I was telling you about how to, set your bars up to where I'm just going to draw a line. I ain't even going to do a box because it'd take so long to draw a box out. Let's just do a little line on the top and the bottom. we'll utilize that as the box. So that was the close on the 18th. That had the most amount of volume in it. So we're going to use that as kind of our box, our zone. And you kind of utilize that throughout the whole entire day of, or whole entire night, better said, and how do we respect that? Well, we keep rejecting off of it, broke above it, accepted back into it, come above it, and then sunk back into it and rejected off of it. You know what I mean? And just kind of made lower prices of it. That's one way of doing it. But right here's kind of sporty. And I mean, if you really think about it, right? Here would have been an opportunity. You rejected out of that box at the Bollinger Band and poked kind of through it. So, I mean, that would have been a pretty sporty play from 673, kind of downward. So that's totally viable. I would have took you could probably feel good about that short. Might have got broke even, but I just can't imagine that you wouldn't want to participate, being that we had broke down from it, tested it, and then rejected off of it. So I see multiple reasons or ways that you could have actually played that. But per this particular strategy, I guess, seeing all that from the night before by utilizing this box, that might have gave you more confidence in behind this trade, seeing as, it's set up, it traps a few sellers, right? I mean, trap some buyers, late buyers, and push below and come back into the box and, rejected off the top or upper Bollinger Band and then just took off. A little more in depth. Yeah, I like it. And then you could have, and we'll mark up that 9:30 morning low and high of that candle too, because that might give you an idea where this thing rotated back up. So think of that as the box, right? And see how we respected it from the next day. I mean, we rejected off of it again, right? With a Bollinger Band poke, So that's pretty sporty. That would have been another short opportunity. And we just kind of stayed below it all day long, right? And then you got your another 1600. Let me delete that. And then you could utilize this from your overnight session, right? We just stayed above it and just continued. Never really tested it till the beginning of that morning. Try something right here. Yeah, you didn't get a test back into. I was thinking it's come back down and tested into that eye, but it didn't. No. But yeah, that's how I kind of utilize them 9:30 opens versus 4 o'clock close. The big volume spikes in between. I just look at that and are we above it? Yeah, I know we broke down below it, but we come back above it and kind of rejected off of it pretty good. So that gives you the bias, right, of the day, and just take that bias and just run with it. Well, man, has anybody got anybody other questions?
How big is your tractor?
Pretty big. Pretty big. Nah, it ain't that big, man. It's a skid steer at the end of the day. It'll be my severance package one of these days. Well, man, if anybody's got anything else, if ain't nobody got anything else, so we'll cut this thing loose and we'll get ready for the overnight deal here. Let's see how we come in right here. We have put volume in. That we kind of rejected off that, right? That is pretty interesting right there.
Thanks again, Magnum. I learned a lot. I really appreciate it.
Ain't no problem, man. I'm glad I was able to help for sure. That right there is pretty interesting. How we just rejected off of that and the Bollinger Band.
What's up, boys?
What's happening?
I have a quick question.
Yeah.
Will this video be made available on your channel?
I don't know, man. I don't have access to that channel. They just made it for me. The community did, so I don't.
Wait, what channel?
Okay.
I don't even know the name of it, to be honest with you. I think it's in the community streams section.
All right, I was like, if it's Tractor Trader, I'll give you I'll give you everything. I made that Vimeo.
Tractor Trader.
Keep down.
If we get above this high right here, this little box that I just drawn, that'd be pretty sporty because we had sold into that close.
Ready?
If we can get above it, come back in, you might see some higher prices. But if we keep hitting this thing and rejecting, I would look for trap sellers. Somewhere there. Well, guys, if y'all are good, I'm good, man. I'm gonna cut this thing loose. Otherwise, ain't no problem, guys.
Thanks a bunch, Magnum.
Palm trees on.
I love it.
Pouring outfit, and this is an 18-month.
Oh, it's like in there.
Hey, Magnum.
Missed. 18.